Okay, so the next topic is the week 9 in your LMS, which is the allowable deductions part 2. So this is the continuation of the first part of allowable deductions, and we are going to discuss the remaining 4 itemized deductions. So our learning objectives here is to identify the allowable deductions for individuals and corporate taxpayers and to cite an example of the applications on the allowable deductions. Okay, so let us reiterate of our topic last time on the allowable deductions. So the allowable deduction, as a reiteration, these are the group of expenses which allowed by the revenue regulations and the National Internal Revenue Code to be deducted to the gross taxable income, and most allowable deductions are appeared in the income statement of the business to arrive the net taxable income. Okay, again, so let us going back to the matrix of the deduction from the gross income. So as a reiteration, of course, we have the classification of deductions, we have the special deductions and the ordinary deductions. The special deductions are the health and hospitalization insurance premium, and this is only allowable to the insurance companies, mutual insurance companies, and mutual marine companies. And in the ordinary deduction, the taxpayer can choose between the itemized deduction and the optional standard deduction, which is the 40% of the gross income of the individual and corporate taxpayers. And for the itemized deduction, these are the actual business actual expenses that are summarized, okay, in the financial statement of the business. And in our previous session, we discussed the first 5 of the itemized deduction, such as the business expense, interest expense, taxes, losses, and the bad debts expense. And today we are going to discuss the remaining itemized deduction, such as the depreciation, depletion, charitable contributions, research and development costs, and the pension trust. Okay, so this is the highlight of our topic on the second part. As I had said, the remaining itemized deduction. So the 6th one is the depreciation and depletion. The depreciation, these are the scrap value, or these are the allowances for the properties or the fixed asset that can be deductible to the value due to the obsolescence, tear, and usage. Okay, so the depreciation is also a deductible to the value of the fixed asset that depreciate because of the usage and obsolescence. So for whatever the amount of depreciation expense, that will be recognized as allowable deductions to the gross taxable income. The 7th one, the 7th itemized deduction is a charitable and other contributions. The contributions or the charitable contributions is a form of a gift or a form of a donation of the taxpayer to the recipient. The recipient is the donee. Please take note that we have the following rules on how this charitable contribution can be allowable deduction. First, if this donation or the gifts of the taxpayer is used or donated to the government of the Philippines and agencies or any political subdivisions of the Philippine government. Because if the taxpayer are donating objects or properties to their family or to the immediate family or friends, that is subject to donor's tax. Okay, but if those taxpayers are donating properties to the government of the Philippines, that will be exempted to the donor's tax because it is a transfer for public use, but this is allowable deductions to the gross taxable income of the taxpayer once they donate those objects or properties to the government of the Philippines or government agencies, even on the political subdivisions of the political government. So what are the requirements in order that these charitable contributions can be deductible? So there must be an actual contributions made. Okay? The taxpayer giving charitable donation must be engaged in the business, trade, or exercise of profession. So it means for whatever the contribution or the gifts that the taxpayer given to the government, it should make sure that these donations or gift it will use or it will came to the profession. Those properties are engaged in the business and profession of the taxpayers. The entity receiving the donation is among specified by the law. Okay, there are some law that's also a rules on how these gifts must be received by the recipient. The net income of the institution must not inure to the benefit of any individual or private stockholder. It means that this net income of the institution, it may not conflict or it will not inure, okay, or it will not take benefit on the part of the business because there are some itemized donations that can be specified by the government, which are allowable deductions. And this charitable contribution, when they donated or given to the government, it makes sure that the purpose of giving a gift, it can be used for public purpose by the government. Example, you are giving a land to a Philippine government. This land can be used for public use, like establishing a school or hospital, a public hospital. Okay, that is an example of the exclusive public purpose or transfer for public use. So what are the classification of the charitable contributions? So we have the deductible charitable contributions, and non-deductible charitable contributions. The non-deductible charitable contributions, those are the contributions made to institutions which are not expressly covered by the tax law, such as the donated to a private sectors or donated to someone. So that is non-deductible to charitable contributions because those things are subject to donor's tax. Okay? But what are those deductible charitable contributions? So the deductible charitable contributions can be fully deductible to the gross taxable income, and there are some charitable contributions which are partly deductible. We say partly deductible, we have to compute for the actual contribution and the limitations of the contribution. That's partly deductible. While the fully deductible is a fully value of the property can be deductible to the gross taxable income. So what are those fully deductible? Okay, what are the fully deductible charitable contributions? Means for whatever the value of this gift is a fully deductible to the gross taxable income. First, if the government of the Philippines or any agency or political subdivisions, including the fully owned government corporation, exclusively to finance, to provide or to be used in the undertaking priorities activities, let's say, a taxpayer can donate a parcel of land to the government of the Philippines that can be used for education, for health, youth and sports development, human settlement, science and culture, and economic development. So that will be fully deductible. Okay. Second, if those donations are for economic development of the Philippine government in accordance of the National Priority Plan of the National Economic Development Authority or the NEDA. Example, you donated a money, okay, that can be used as a fund for the, let's say, poor piece. So it can be fully deductible. The third one is if the charitable contributions is fully deductible, if the foreign institutions or international organizations, okay, it is if the taxpayer is donated, okay, donated to the foreign institutions or international organizations in compliance with the agreement, treaties, commitments entered into by the government, foreign institution, and international organizations. Example of number 3, let's say a taxpayer will be donating a money, let's say, the money to UNICEF. Okay, we all know that UNICEF is a welfare on the children. And then the UNICEF has also a tie-up with the Philippine government to help the welfare of the children. Okay, if the taxpayer has a treaty with the UNICEF, and UNICEF is accredited by the government for the commitment, then it should be fully deductible for whatever amount of the donation or contribution of the taxpayer. It will be fully deductible. Another, if the taxpayer donating to accredited non-government organizations organized and operated exclusively for the scientific, research, educational, character building, youth and sports development, and even health, social welfare, and cultural charitable purposes. Okay, so these are the following rules in number 4, that the taxpayer can donate to the accredited non-government organization provided that the following conditions or requirements are fully complied by the taxpayer, which is fully complied with the donations or contributions, that these donations are utilized directly for the active conduct for which it was organized, and utilized not later than the 15th day of the 3rd month after the close of the taxable year. Let's say the taxable year is 2021. So you donate it, it will be utilized not later than the 15th day of March, which is the 3rd month of 2022. The amount of administrative expenses shall in no case exceeds 30% of the total expenses. And in case of dissolution, okay, dissolution of the nonprofit organization, it could be transferred to another nonprofit domestic corporation organized by the similar purpose. Example of that, let's say an individual taxpayer donated to, let's say, non-government organization, let's say, Hospicio de San Jose. Let's say, Hospicio de San Jose. And the Hospicio de San Jose, let's say, it will be closed. So, for whatever donations given to Hospicio de San Jose, which is already closed or dissolute, this donation will be transferred to another nonprofit organization which is similar to Hospicio de San Jose, as an example. Okay? And if the donation or the charitable contribution is fully deductible, if it is donated to the accredited nonprofit organization recognized by the government, such as the Cultural Center of the Philippines, Ramon Magsaysay Award Foundation, Boy Scout and Girl Scout of the Philippines, Integrated Bar of the Philippines, ROAS Educational and Welfare Committee, and the National Social Action Council, or the NASA. International Rice Research Foundation, Development Academy of the Philippines, State College and University, School of Deaf and Blind, Philippine Amateur Athletic Association, Artisan Well Fund, and the National Museum, Library, and Archives. So those are the charitable contributions which are fully deductible to the gross taxable income. And of course, we have also the charitable contributions which are partly deductible to the gross taxable income. So these are the donations made to the following institutions that are subject to limitations. That's why it is partly deductible, which is the amount donated or contributed cannot be deducted totally. So what are those donations that cannot be deducted totally? First, if the taxpayer donated to the government of the Philippines or to any of its agency or political subdivision exclusively for public purpose. Example, the right of way. Okay, the right of way for the public highway. You donated it. So it's not fully deductible, but it's partly deductible. Domestic corporations or associations or institutions organized are operating exclusively for the following purposes like religious and charitable works. So that is only partly deductible to the gross taxable income or allowable deductions. Scientific, youth and sports development, cultural or educational, rehabilitations of veterans. social welfare institutions, and non-government organizations or NGOs. So it means those are charitable contributions are donated to the following institutions which are partly deductible. Okay, which is there is a limitations. So what is the amount of deductibility? The amount of deductibility to the gross taxable income of the charitable contributions, okay, as a partial deductible, first we have to get the 10% of the taxable income, the gross taxable income before the contribution if the donor is an individual taxpayer, and 5% of the gross taxable income before the contribution if the donor is a corporation, or the actual contribution, whichever is lower, to be applied as allowable deduction if the charitable contribution is partly deductible. Okay, so let's have the following illustration here. During the current taxable year, Mr. Juan de la Cruz presented the following data related to the operation of his merchandise business. So Juan de la Cruz has the sales of 3,250,000, allowable business expenses, including cost of sales rather, 1,970,000, and allowable business expenses excluding contributions, 93,000. And the charitable and other contributions. And what are those charitable and other contributions? The national government for educational purpose, that's 370,000. The provincial government for general purpose is 105,000. And to an organization will go on strike, 20,000. So the requirement here is to compute for the deductible for charitable contribution in the following cases. First, let us compute for the allowable deduction of charitable contribution if the donor is an individual taxpayer, and the second one, if the donor is a corporation. So we talk about fully deductible and partially deductible on the charitable contribution. Okay, so what's the answer in number one? So the deductible, charitable, and other contributions are the national government for educational purpose, 370,000, and to the provincial government for general purpose, that's 105,000. So the 20,000 donations to up to a strike is not inclusions or not allowable deductions. So the total deductions is for 75,000. But there's a big but. Let us classify the fully and the partly deductible. The fully deductible is the donation to the national government for educational purpose. But the donation to the provincial government for general purpose is not fully deductible. It's partly deductible. So let us compute for the limitations of the partly deductible. So the actual partly deductible on the provincial government, 105,000, and let's compute for the limitations. So this is an individual, the 10% of the gross income. So how does the 1,280,000 derive? It will be derived on the following income. So the sales less the cost of sales, that is 1,280,000, which is the 10% is 128,000. So that our ruling there is for whichever is lower on the limitations or the actual contribution, that will be applied. So since the actual contribution of 105,000 is lower than the limitation, so it will be prevail. So the allowable deductions for charitable and other contributions is 475,000. Okay, and answer to number 2. Okay, the answer in number 2 is the same data. Okay, this is the allowable deductions, but the fully deducted charitable contribution is at 370,000, but the 105,000 donated to the provincial government is a partly deductible. So let us compute. Let's go. The actual contribution is 105,000, and the limitations, because this is a corporation, the 5% of the gross sales, which is 1,280,000. So therefore, the 5% is 64,000. Since the limitation is lower than the actual contribution, then the 64,000 limitation is the partially deductible, and that would be applied. So that the allowable deductions for the charitable and other contributions okay, that with a total of 434,000, which is the fully and partially deductible. Okay, so that is the charitable contributions. And the 8th itemized deduction is the research and development cost. So the research and development cost, if the business or the taxpayer is doing a research and development for the innovation of their products and services, for whatever the cost of the research and development, that will be allowable deductions to the gross taxable income. And the pension trust, as the last itemized deduction, this is established by the employer or the business that will be given to the employees who are retirable and giving pensions at the time of the retirement. So this pension trust is allowable deduction if this pension plan, okay, is approved and allowed by the BIR commissioner. Okay, so that is the itemized deduction, and that is the second part of the allowable deductions.